Hello and welcome to Money Tips. This is Charles Kelly, bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. I hope you're having a great day today. This is actually the day when the FTSE 100 index, which is the stock market index for the largest companies in the UK, has seen the biggest fall in 4 years. It's been their worst day since 2016. And this is as a result of this growing coronavirus that is now in Italy and South Korea. In northern Italy, the supermarkets are starting to run short of supplies as they lock down the area. In China, we see industry coming to a standstill, as I was talking about last week. And I think this could grow. Finally, the stock markets have been spooked by this, and I think it could get worse unless they really get to grips with this virus in the very near future. Now, some of you might say, well, what's wrong with this virus? I mean, more people die from flu every year, and that is true. Even in the UK, I mean, nobody's died. No one's really in danger of dying at the moment, and yet this winter, thousands of older people would have probably died from influenza, from flu. But this is spreading so fast. It's gone from a small town in China to all over China, to ships where people have been infected on ships even though they've been kept in their rooms and under quarantine, to Iran and countries like Iran. I mean, and deaths in other countries outside of China. So if that happens, they'll call it then a pandemic. At the moment, it's an epidemic, and it could have serious consequences because the markets. The stock market will look at the likely performance of a company over the next year or 5 years or whatever. And, if they're looking at a company, for instance, an airline, and they see that travel is just taking a complete, pardon the pun, a nosedive, then they will obviously be downgrading those shares and say, well, those shares are not worth as much as they were yesterday because of this growing problem. If they're looking at a company like Apple that actually manufactures most of their phones in China, how can they value that company at the same as it was a couple of weeks ago? And there are lots of companies that are being affected by this. And, we saw a drop of 3% at one point today. And yet at the same time, and that doesn't sound a lot, does it? 3%, what's 3% to between friends? But, that actually equates to billions of pounds in the value of stocks. And then you might say, well, so what? What does it matter if, Glaxo or BT or HSBC are worth a little bit less today than they were yesterday? But it does make a big difference because, it has a direct effect on all of us in terms of our pension funds, because our pension funds are invested in these markets and in these shares in the FTSE 100 index. It will affect confidence in the market if these share prices fall further. Then it literally devalues the company. It means that company is worth less than it was. It then could be open to a takeover bid from somebody else, from another company. The Dow Jones also fell. Firms such as Nike, Apple, Walt Disney, which do major business in China and rely on it to make goods, with some of the hardest shares down more than 3.5%. I expect that things may bounce back in the short term as traders then say, well, we can buy Apple at a 3% discount. Why don't we do that? The biggest travel firms, the biggest sufferers in the UK were companies like EasyJet, which sunk 16%. I mean, that's a lot. That means your company's worth nearly a fifth less than it was. TUI, British Airways, owners IAG, were both down by more than 9% at the close of business. Now, it's traditional that in these volatile times that money then pours into things like gold. Gold at one point was up by nearly 3%. I think by the end of the day, I just checked it, it's been up by, it went up a lot and then it went down a little bit. So on the day, it's still up nearly 1% and something like 5% on the week. So in a week, gold shot up by 5%. Silver was a similar story. It gone up at one point by 3% in the day and slipped down to around about 1% on the day. But these are things that commodities that people or investors will go into when the markets are a bit shaky and they're looking for a bit of stability. Because don't forget, some of these funds have to invest. A lot of these funds can't just sit on cash, sit on billions of cash and sit on this big money pile waiting for investments. They've got to be invested in the market, particularly things like unit trusts. So that's what's been happening. Now, today I've been on a property mastermind, and all the news about property at the moment is property is going up. It's finally going up. The Boris bounce. We're going to regenerate areas of the north. And perhaps people are ignoring the stock market. Well, it doesn't matter if the stock market's going down. I'm in property. Well, that doesn't always follow, because when there are big stock market crashes, normally property prices follow. Because if the stock market crashes and prices of shares have gone down, profits are down, they eventually are going to say, well, let's cut back on investment. We haven't got as much money to invest, and that means maybe that people will lose their jobs. So it affects the economy. Don't think that, well, I don't invest in stocks and shares, so it's not going to affect me. But it will affect you. It does affect you. It affects all of us, because our whole economy, our whole capitalist system is based on companies and people and shareholders investing in these companies to build capital, to build jobs. Government don't create jobs. These companies create jobs. So if it goes down, it's going to take everybody down with us, and including property investors. Now, property is not as volatile, of course. You don't see property prices going up and down like this. But at the same time, property is not a liquid investment. It's not as liquid as shares. When you hold shares and you think the market's going down, you can phone up your broker, or you can do it online and sell, and you'll nearly always have a buyer for those shares, because that's the market. That's the way the stock market works. But if property prices are going down, you could be stuck with it for years unless you sell it off at a cheap price. So we'll have to see. I'm not saying the market is going to definitely drop, but this could be the signs of it. We don't know. It's the worst day for 4 years, as I said. And look at the figures on corona. 77,000 people in China have been infected, and nearly 2,600 have died. And that's only the reported cases. We don't really know what's happening there. We don't really know what's happening in Iran and countries like this. We don't know if it's spread. We know it spread into South Korea, but if it went into North Korea, then what? I don't know. Perhaps North Korea is perhaps the safest place to be, because they're closed off from the world. So we shall have to see. Now, I'm the author of the book Yes, Money Can Buy You Happiness, and I was a financial advisor for 25 years. So I've seen markets going up and down over the years, and if you look back on the charts, you can see the major crashes like the 2008, the 1987, and there was one in the 90s. It tends to come every 10 to 12 years. So we have seen quite a good bull run of 12 years, and as I've said before, there's no logical reason sometimes for these markets to drop. Sometimes it could be just something like this. It can be a health scare. It can be a trade war scare. It can be the possibilities of a war, or an actual war, or an oil crisis, as happened in the 70s. You just don't know. It only takes one thing to tip this fragile house of cards over, and the markets can come tumbling. And the reason they tumble is that once somebody sells and the market then tumbles, it's then computers and programs that are selling these stocks. And this is what happened in 2008, that there was this sell-off, and then that causes the price to drop and drop and drop, because everybody's selling at the same time. So we shall have to see what happens in this case. But we are due for a correction. They call it a correction when it's gone down maybe 3, 4, 5%. They call it a crash if it goes down by more. Maybe sometimes the market's gone down by 25, 30%. So that could be a crash. And if that happens, then it will have long-lasting effects on the economy, as it did in 2008. But the governments are trying to hold up the market. They're trying to print money, not literally printing money like off a printing press where it just churns out like that, like a forger sitting in an office printing money. It's more like creating money and buying bonds with this created money, and then the bonds shore up the market, and more money goes into the market. And China have been doing this to hold its economy up a little bit. But we'll see. China says they've got it under control. I think they're going to start production again soon, and we shall see. Now, as for property, just be careful out there. Just make sure if you're investing in property, make sure you buy at the right price. Make sure you know what you're doing, and if you don't know what you're doing, then come along and maybe join me on one of the courses I go on. You can go on a free taster day course, learn about property, learn how it works. You can get a rough overview of the various strategies that you can employ to build your property portfolio. Some of you may want to just invest on the side and keep your job. Some of you may want to quit your job within 6 months to a year, and that is possible. Some of you may already have money to invest, and you're invested in the stock market. You think, oh, it's a bit volatile. Let's go into property. Let's have something a bit more stable. Some of you may be investing for income, some for growth. So there's various strategies you can employ to either maximize your income, like for instance, HMOs, houses of multiple occupation, serviced accommodation. There's different strategies for producing income. Growth, you may want to look in areas where there's high capital growth, but maybe not such a good yield for income. So as I said, different strategies apply to different parts of the country even. So you've got to really look at all the strategies. And what a property taster day would do for you is give you an overview. Now, they offer these courses for free. Now, yeah, everybody knows they're offering a course for free, but when you get there, they're trying to sell you a further course where you would pay. But, you're not locked in a room and forced to sign on the dotted line. It's up to you whether you want to, do a course on serviced accommodation, HMO, or how to buy properties using none of your own money, no money down courses. You would go there. They say, right, this is the overview. This is how no money down investing works. This is how joint venturing works. This is how rent to rent works. Serviced accommodation, houses in multiple occupation, or just straightforward buy to let. This is how it all works. You need a mortgage. You need this. Right. Now, if you want to know more about HMOs, there is a course starting in a month's time. You can go on this HMO course. It costs this. You sign up for it. If you don't want it, that's fine too. So it's a way of adding value to people, giving people value up front and saying, right, we'll give you value, and hopefully out of maybe 100 people that turn up, maybe 10 will go on and buy further courses and actually pay for courses. It's a bit like the way the internet works, isn't it? You see a free thing on the internet, you see a free seminar, and then at the end it says, would you like to find out more? Sign up for my paid course, and that's how it works. So I'd certainly recommend it. It will definitely open your eyes if you go on a one-day taster course, or some of them are a weekend taster course. I would definitely give that a try. If you want to do that, email me at charles@charleskelly.net, or here on Facebook. You can get me on Messenger or LinkedIn. Just drop me a line and I'll send you some dates of courses that are coming up in the near future. And one final thing, the new Chancellor, do you know who the new Chancellor is, by the way? I bet most of you don't know who the new Chancellor is, or can you say his name? He's actually a guy called Rishi Sunak, and you'd be forgiven for not knowing who he is because he was just appointed in the last reshuffle. Outside of political circles, no one had ever heard of him. I've heard of him. I actually met him because he came to my constituency a few years ago asking if we would select him as the MP when the other MP had stepped down. And we didn't select him, and it was another one we selected, but there you go. We're happy with our MP anyway. And he's planning to, there's a budget coming up and he's planning to bring in a few changes. Now, one of the things that's been mentioned today, that he's going to look at this new revenue ruling on what's called IR35. Now, IR35 relates to employment that happens via, well, I say employment, it's not supposed to be employment, but companies that employ people as a consultant on a short-term contract or a long-term contract, and that company employs the person not as an individual. They don't employ them, they hire the company, a limited company. So I set myself up as a company and I hire myself out to HSBC as a computer consultant, and I invoice that company and they pay me, and then I pay my tax, less expenses, and my corporation tax and any income tax and all these things, and my own national insurance. But the company, once they've done that, they don't have to pay any employer national insurance, which can be as high as 14%. So it actually does save the company money. It makes it more flexible. But the revenue, HMRC are saying that this is in effect disguised employment, that some of these people are not really self-employed contractors, they're really employed. So then they could start making the companies liable for the national insurance. Now, this was all going to come about in April, and the Chancellor, Rishi Sunak, has said that he will ask that, I think there's going to be a period where they won't be so heavy-handed, because this could end up damaging a whole employment sector. It could end up damaging part of the economy if they go in too heavy-handed and too ham-fisted, using a sledgehammer to crack a nut. There might be some people who abuse the system, but on the whole, the country needs a way of employing consultants and IT people on a flexible basis, because many of these projects are short-term. And what we don't want to see, which we are starting to see, is that these contracts are start to be driven abroad, because the HMRC get too uppity and get on their high horse too much and end up killing the goose that lays the golden egg, because these companies tend to be quite high-tech companies, they're quite high-paying companies, and people who outsource their service on a limited company basis are normally high earners, and they pay a lot of tax. So if you mess it all up by over-regulating things, then you're going to see this type of employment or this type of work going abroad, and that will be sad for British people and for the British economy. So good luck to Rishi Sunak, and I hope he does something about this so that we don't see a mass exodus of employees. Now, some people, you could also argue that yes, you might be earning more money with this limited company, but you're also on a dangling on a bit of string that you can be laid off at any time. So it's not so secure. So I think the tax treatment should be different for those people, but we shall see. Anyway, so that's it for now. On a day when we have seen that the FT 100 index showing its biggest drop for over 4 years. Billions were wiped off. I think something like 60 billion were wiped off the stock market value today. The Dow Jones in America has followed. So we will have to see what will happen in the next coming days, and whether this coronavirus will continue to spread literally like a virus all over the world, and now then get into the stock markets and affect those stock markets. So we will have to see, and hopefully things will settle down again and we won't see another crash. Although, as I said, I think we are due for certainly a large correction in the stock market. So there you go. Thanks for listening. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. If you're interested in learning about property, get in touch with me, charles@charleskelly.net, or on Messenger, which you can get me on Charles Kelly on Messenger or on LinkedIn. So thanks for listening, and bye for now. Have a great evening.